Welcome to Forward Thinking with Vitality. Because the world is moving fast, the world of protection also needs to. Thanks for joining us today as we delve into the topic of income protection, a product that arguably sits at the cornerstone of good protection planning and where there feels like a real momentum behind it over the last few years. So I'm joined by a panel of expert speakers today as we delve into that subject. And just to give you a quick rundown of the agenda, hearing from our panelists, we've got an interview with Andy Walton from Mortgage Advice Bureau, and we'll return to our panel discussion to get into the topic in a little bit more detail. We're also hearing a little bit about some recent product enhancements from Vitality, and then at the end we'll have a live Q&A, so do make sure you get your questions in and we'll answer those at the end. So, introducing my panelists, I'm joined by Emma Thompson, Director and Chairperson at the Women in Protection Network and a board member of the Protection Distributor Group. Great to have you with us today, Emma.
Thanks, Rob.
Nick Telfer, Head of Protection Development at Vitality. And finally, Michelle Grant, a Senior Protection Advisor at LifeSearch, and also one of the Income Protection Task Force's 7 advisors and IP ambassadors.
Thank you,
It's great to be joined by all of you today.
Thank you.
So just to kick things off, so income protection, there's been, as I said, a lot of momentum over IP, around IP over the last few years. We obviously just had Income Protection Action Week. It's become a kind of regular fixture in the industry calendar, now having been run for a few years. So, Emma, where are we as an industry when it comes to income protection? What progress have we made?
I think we have made some really good progress, and we should be proud of the fact that actually there are more conversations taking place, as demonstrated by the fact that every quarter, there are statistics that are produced by reinsurers and other organisations that show that income protection is on the increase, which is brilliant. But at the same time, we also can't be thinking wonderful jobs done, because actually there are just so many consumers that haven't even heard of the product, let alone even are in a position to make an informed decision as to what they want to buy it. There was an insurer that released some statistics earlier this year that showed that 80% of mortgage holders don't have income protection, for example. So we've got a long way to go, but it's encouraging that clearly more conversations are taking place and more consumers are taking out the product.
Yeah. So we're making some progress. But Michelle, obviously being an advisor, you're talking to consumers, clients day in, day out. What's your sense kind of being at the coalface of kind of how switched on, how engaged the consumers? Are they more aware of income protection? What's your kind of sense of where we are?
I think as an advisor, it's our role to make them more aware. And really, when we're doing the income and expenditure and we're looking at what sort of emergency funds they have, majority of people that I speak to haven't got savings beyond 1 or 2 months. So that makes them, less resilient if there was an income shock, if suddenly, their wages was to run out through sickness. So it's pointing that out to them. They tell us about their hopes and dreams and aspirations, and it's actually bringing them into reality of, what would you face, or how would your family be impacted if, you was to become ill and your wages was to stop.
Are you finding that people you speak to are more kind of receptive to having those conversations now? Are they a little bit more kind of, perhaps after COVID and everything we've had over the last few years, a bit more receptive?
I think people are more switched on since the pandemic, since the furlough scheme. People are more aware that, and also employers are reviewing the benefits that they're offering, and a lot of employers have cut back, we're finding. So it's a good conversation to have, and they go back to HR and they're quite shocked when they realise, their sick pay runs out after 4 weeks and there's no backup plan.
Yeah. I guess, Nick, it's a good point, isn't it? We had kind of furlough, that was like arguably a sort of income replacement scheme on a grand scale. So there perhaps been slightly more awareness now of the importance of IP.
Definitely the pandemic has triggered more interest and provided us with an opportunity to talk more about income protection. Are we doing well? Yes, I think we are. I mean, funnily enough, I was looking at some old school reports of mine, which were written on parchment, funnily enough. But I think there's some words that my teachers used in there that could work quite well for the IP market, and that's doing okay but could do better. And I think that's the message there.
Yeah, really good point you make. And one that I was able to discuss earlier on with, as I mentioned, Andy Walton, Protection Proposition Director at the Mortgage Advice Bureau. So I caught up with Andy earlier on just to get his reflections on having spent a few years working in the industry and some of the progress that MAB has made over the last few years.
Yeah, so if you look at where we are with income protection across the UK, I tend to look at the Swiss Re Term and Health Watch each year because that's probably one of the best barometers as to what's going on. I think looking at industry stats, so the latest report from Swiss Re Term and Health Watch 2024, which of course is looking at 2023 figures, shows that altogether in the UK, we sold, roughly speaking, 2 million protection policies in total. That covers all policies, of which just short of 200,000 were income protection. So you don't need a calculator to work that out. 10% of all policies that are sold in the UK are income protection. That was up 10% on the previous year from a case count point of view. So clearly there's some growth there because overall things look fairly static when you look at the figures. What I did, because I've sort of collated these Term and Health Watch reports over the years, so I went back quite a few years. I went back to looking at 2017 figures to look to see, well, what was the UK market doing then in relation to IP?
Yeah.
Interestingly, the top number of total protection cases back in 2017, it's almost identical to what we're doing now as a market. So really, the UK market overall for protection hasn't moved the dial at all.
Yeah.
But income protection has. So back then in 2017, 6% of the UK market was IP. It's 10% now. So it's definitely moving the dial because no other product line has moved the dial to that extent. And the other barometer I sort of look at is, well, how does that compare to critical illness? Critical illness is running at 25%. So give or take, last year, 500,000 critical illness policies were sold, 25% of the 2 million. And I would suggest, and I don't know if people listening into this would agree, advisor, business owners, whoever they are out there, shouldn't income protection be equivalent at least to critical illness?
Yeah.
So we might be patting ourselves on the back thinking we've moved the dial from 6% to 10%, but shouldn't it be equivalent to 25? Or maybe you could argue income protection should be above critical illness as a percentage. So if that's the case and we should be above 25, we've still got a long, long way to go.
Yeah.
And my gut feeling is there is still a long, long way to go with income protection.
Do we need to start thinking a bit differently as a kind of broad advice industry about where income protection sits in that kind of hierarchy of protection needs?
Yeah, I think it's a really good point because when you talk to most advisors, certainly the ones I've come across in my time, they all pretty much do say, yeah, IP should be the priority. I mean, there's not many people who say it shouldn't be. We know that life assurance is absolutely fundamentally important. We know critical illnesses as well. But in the terms of the risks of something happening, when you look at, we tend to look at, because we're mortgage based, we will look at the risks of something happening within a mortgage term. And actually the chance of somebody dying within the mortgage term statistically is very, very low.
Yeah.
It's nuclear if it happens, but the chances are low. Hence the cost of life cover is actually probably cheaper than mobile phone insurance in a lot of cases. Yeah. Income protection is quite different. It's much, much more likely to happen. And so I think you're right. The trick really is to ensure that the trick really is to help advisors know what those risks are, buy into those risks, explain those risks to the customer, help them to understand the likelihood of things happening. And I think once you do that, rather than talking about product and saying, I need to talk about life insurance, critical illness and income protection, which some do it like that,
yeah,
it doesn't sound very customer centric. And it sort of sounds like I've got quite a lot of product that I want you to look at, rather than, considering the needs of the customer and what could go wrong. So we display things in terms of risks, and it starts off with the highest risk going down to the lowest risk. So we're sort of showing customers the percentage chance of being off work sick for more than 2 months, and then the chance of something going wrong from a critical illness perspective, then the chance of dying, and everything now is leading with the higher risks.
Yeah.
that in turn, I think, makes a difference to customers because we're sort of leading with those risks, and therefore it sort of ends up number one on the agenda.
Yeah, yeah, and there's a lot of tools, isn't there? Advisors can use sort of risk calculators. Vitality offers one, and a number of insurers offer them. That gives you a very simple report that shows you those like, because as you say, it's the impact of death during a mortgage term is catastrophic. But as you say, the kind of risk of that happening actually is relatively low, reflected in the price. So
one of the key things that we've found is ensuring that it's on the agenda every single solitary time.
Yeah.
That's probably the biggest thing that anybody can do, is to say, hand on heart, when I've given any sort of FS advice to a customer, whether it is started with mortgage or whether it started with some other type of wealth advice, was protection on the agenda? Was it dealt with as a priority? Was it given the right amount of airtime? And unfortunately, I don't think that happens all the time. Some advisors maybe don't believe in it, understand it, really want to get into it, so it's never even on the agenda. Others, it is sort of on the agenda, but depending on time pressures in their own world, it could take more of a back seat and maybe not be dealt with either at all or as fully as it should be in every single case. That really is one of the major things, I think, to ensuring that every single customer understands the risks, understands what happens if something goes wrong, and understands what the solution is. I mean, under Consumer Duty, actually customers understanding what their needs even are, and then understanding what the solutions are is absolutely, completely paramount.
Yeah.
And IP needs advice.
We'll unpack some of that in our panel discussion now with our advisors and other guests. But Andy, thanks very much once again for coming in and sharing your thoughts and insights with us. Hugely appreciated.
Pleasure, Rob. Good to see you.
I guess one of the challenges is at the moment is, we hear there's record numbers of people out of work due to long-term sickness absence. Obviously, productivity is a real challenge. There's a pretty obvious need, as we've discussed already, for protection. We've had the COVID pandemic followed by the kind of cost of living crisis. Emma, I'll come to you first. How kind of resilient would you say that UK households are in the face of a kind of income shock? Where's that kind of need?
So I think overall they're not as resilient as they could be, and they really should be. Again, there was some other research that was released earlier this year that showed that 65% of households need both incomes in order to actually just pay the everyday essentials. And I think one thing that we've just got to be really careful of as an industry, and that goes for the advice sector as well as manufacturers, is really making sure that products and solutions are targeted at both people who are earning that income in the family. And it's not just the breadwinner, the primary earner, that we need to be focusing on. And sadly, there are still quite a lot of advisors that focus on the needs of the primary earner. And really, as that statistic showed, both incomes are important. It doesn't matter whether somebody's earning £60,000 and the other person is only earning £30,000 or even £15,000. That £15,000 could be really, really important. So I think it's really, really vital that when the conversations are taking place, that the advice that's been given is to both people, because actually that 15,000 could make a real difference, even if it's just a question of, the kids clubs, the holidays, whatever it is. But that 15,000 could be something that actually isn't easy to cope without. So, for advisors, when they're giving advice, they really should be focusing on both people. Yeah. And sadly, that does affect more women. We really see that, that's one of the reasons why women are less financially resilient, because they do earn less and therefore their protection needs are perhaps overlooked a little bit more so than their partners. And we need to sort of change that narrative and make sure that everybody is part of that conversation. And actually, women are really good to engage with when it comes to protection. Our network did our own research a couple of years ago, and it showed that actually women value protection better. They're less likely to cancel the cover as well, whereas men are more likely to perhaps keep their gym membership and cancel their insurances. So absolutely. So women are really good at actually recognising the importance of looking after the family finances and their well-being. Do talk to both people when it's a couple that you're actually advising, because there's so much opportunity to make a really positive difference to that family and that household.
Yeah, and Michelle, this is so important, isn't it? Is you mentioned it earlier on, people think they're perhaps more savings than they have, or that they've got a safety net in place, and actually they haven't. And that kind of the thoroughness of the advice is so key here, isn't it?
Yeah, definitely. And I'm also finding that a lot of women are becoming self-employed as well. So I'm part of quite a few network groups, leadership, entrepreneurship, and oftentimes people are taking out mortgage for a lot longer. So it used to be a 25-year mortgage, but now you're talking 35 years or 40 years, which is quite shocking. If you've only got 6 months worth of sick pay, there's a big shortfall there. So how are you going to make a
point Michelle's made as well there around actually thinking about what the client's needs are and addressing those. And it's not always just one kind of product that does that, is it? You've got to think a little bit more kind of creatively about this stuff.
No, absolutely. And I think it comes back to the word advice and defining what that actually is. And it's not just picking a particular product for someone. It's about understanding what their needs are, exploring those with them, and then coming up with solutions. And being flexible in the solutions, not just from a product construct perspective, but also from a price perspective. It's fundamentally essential. If we just get hung up on products and price, we'll never solve this problem.
Yeah, absolutely.
doom and gloom? We're living longer. We're living longer, but unfortunately with that comes the ailments. So we're 26 times more likely to be sick in the next 25, 30 years than we are to pass away. So it means that these income protections really come to life, because we can draw down that money as many times as we need it over the next 20, 30 years. You see what I mean? So our generation, we're more likely to have things like diabetes and cancer, but actually get over them.
Yeah.
So it is a good news story. We're living longer, but we just need that additional support network.
Yeah.
I think there's a fundamental challenge that we as an industry have is that we're trying to get people to buy something, whether it's income protection, life insurance or critical illness, they don't want to ever have to use.
Yeah.
And that makes it a very difficult conversation when you've got people, our general public, who have a real optimism bias. It's not going to happen to them. And that's why things like the Vitality Programme, for example, can help advisors in presenting the proposition as something more positive and engaging than just some promise that sits in a drawer till maybe it's needed or maybe it's not.
Yeah, because that's a real challenge, isn't it, Emma? Is that, traditionally, as Nick says, protection, you're just buying an intangible promise of a payout, and you hope you never, if the money is wasted, great, you've never had to claim on it. But I suppose that is still a barrier, isn't it, to people? It's not just income protection, all protection.
It is a barrier, and and that's where it's really important that we do actually convey all those added services that clients can actually be tapping into. So we are now giving far more back to policyholders, and pretty much all the insurers have got something to offer a value that they could be utilising throughout the term of the policy. But as Nick said, it can be a challenging sale. I am a claimant. I had breast cancer 5 years ago. So, I was able to claim on my income protection and my critical illness cover, so, and I have, as Michelle said, lots of people have these things and they return back to work, and I'm one of those people, thankfully. But, it's really important that we do try and make sure that we are, that there's that whole sort of phrase, you don't want to be disturbing clients. But actually, sometimes you do need to be really quite honest with them and just saying, look, you're not a superhero. Stuff happens. It's Breast Cancer Awareness Month at the moment. 1 in 2 people are sadly going to get diagnosed with cancer at some point in their lives. And actually, that is a statistic that pretty much most consumers will have heard of. Yeah. And advisors just need to sort of work out the best way of trying to have that conversation without scaring anybody, but kind of laying it on the table that bad stuff can happen. You insure your phone, you insure your pet, insure your home, you need to insure yourself, because actually without your income, you can't pay for any of that stuff anyway.
Yeah, and it's
so much support when you are actually at a point of claim. Insurers offer a lot of rehab to try and help you get back to work, and some clients can actually get back to work before the deferment period's even ended. There is a lot of support out there, and that's why these products are so valuable.
And that is fundamentally where we've got to go as a market. And I think we're leading the way a bit here at Vitality, because we've now included in the policy, access to mental health support, physiotherapy, and the cancer support as part of the policy, rather than as part of our claims process, which I know all insurers do, as Emma points out, because I think we sometimes forget, if you're not well, if you're ill, you've got something wrong with you, be it a bad back or you've got a mental illness or whatever it might be, the one thing you want to be is better.
Yeah.
Yes, you want your bills paid, but the holistic proposition is one that helps keep you healthy. If something does go wrong, helps you pay your bills, and while it's doing that, helps you get better. And I think if we can move the market in that direction, it's a much more appealing product and a much more relevant product to the customer.
Yeah, and I suppose the design of IP products sort of fundamentally remains pretty much the same. There's not been any kind of dramatic changes, but Emma, there's a whole load of features and benefits now, aren't there, within IP plans that do allow it to kind of flex and move and kind of and there's probably more for advisors to be a little bit aware of, but they're...
Yeah, absolutely. And I think, we touched on obviously, serving a customer's needs, but actually you need to be considering their future needs as well. How might their lives change? And some of those things, you have no idea what might happen in the future, but some of them could actually be quite sort of, common occurrences. So for example, going back to advising women, are they at a point where in the future, they might be needing to take a career break to look after the family, in which case then choose an income protection provider that will still pay a claim if they're not actually in work at point of claim, because actually women are far more likely to be going in and out of the workplace. I mean, there are lots of stay-at-home dads as well, which is brilliant, but this is something that does affect far more women than it does men. Think about those clients that have got fluctuating incomes. What can you do to try and make sure that you are securing the benefit level far, giving them more greater security than perhaps products that they might be sort of at a point of claim, not able to actually claim for the amount of money that they thought, whether it's a benefit guarantee or, utilising your, Vitality's offering, for example, of being able to secure the benefit level by the financial underwriting at outset. There's lots of things that you can be doing as an advisor to try and make sure that you're giving your clients the very, very best chance of actually claiming.
Yeah. And I guess, Michelle, from your perspective, thinking about the kind of product, partly though, this isn't as bad, it's like the importance of holistic advice. So it's not just relying on one option, and actually, I guess it's the important thing is having a conversation with the client, isn't it? It's kind of uncovering what their needs are and then trying to think about those product features and benefits and tailor those.
Yes, and also having regular reviews and regular check-ins with our clients, which we're encouraged more and more since the Consumer Duty as well. So the fact that you see your vitality statement every year coming in is an opportunity to actually speak and reach out to your client and say what's changed, because a lot can happen in 12 months, as we know.
Yeah, that's such an important point, actually, isn't it? That those, arguably, I mean, you should probably review cover every year, regardless of what it is, but income protection, there's probably an extra imperative there to do with IP, isn't there?
Yeah. And what I like is that your money holds its buying power if you index link it.
Yeah.
So, and people are more switched on to that, and we're more having conversations about that at the moment. So
you find that then the clients are, they kind of get it, they recognise the need.
Especially the younger generations, they're really switched on to the fact of inflation and what's going on in the economy, much more so than previously. So.
But that's even more of a reason, though, given the current climate with indexation, to be reviewing cover, because salaries are not keeping pace. So actually, there is a real risk that clients are becoming overinsured. So tapping into that, checking in with them, making sure that their cover remains suitable, giving them the options about what they can be doing with that index option is a great thing. But yeah, I mean, for years, people just didn't really see the value of indexing because obviously nothing really happened. But now, obviously, we've seen costs rising, absolutely, and actually those costs rising has given a greater need for protection, because actually people's, spending power has gone down and they really need IP. It might be a bit of a challenge in terms of, can they afford to have IP because everything else has gone up, but can they afford not to have IP?
Yeah. I mean,
and just on the indexation and over-insurance, with the Vitality earnings guarantee, that's indexed.
Yeah.
So that risk is gone. So if you've got a client who's indexing, think about them verifying their income up front, and then you're minimising the risk, if not removing the risk of them being overinsured.
It's a really useful feature, that, isn't it? It's really, really key.
Because if you don't sell indexation, you're selling decreasing cover.
Yeah.
Yeah.
There is no such thing in my world as level cover.
Yeah.
If you don't index it, it's decreasing.
And for mortgage advisors, they've got so much of that financial information up front anyway as part of the mortgage process. So actually, sending that to you to actually guarantee the income shouldn't actually be that onerous at all.
No, not at all. Yeah, I mean, I touched on briefly as well. You said there, obviously, the kind of high inflationary environment has, on the one hand, kind of heightened the need for protection, but also there's that challenge of affordability. Michelle, what's your experience been? Are you finding that affordability is a challenge with the people you're talking to?
Definitely. I mean, in an ideal world, all my clients would take the full term income protection. But unfortunately, as you get older, it's a lot more expensive. So in order to tailor it to their budget, sometimes I have to offer a 2-year plan. But having 24 months worth of peace of mind and guaranteed pay is better than not having any. Do you see what I mean? So
Yeah, I guess there's those levers that you can manoeuvre and you can tweak it
And you've got things like Optimizer, which can help
yes,
bring that cost within budget.
makes a big difference.
Yeah.
Yeah. Well, look, I think this is a really good point. Just to quickly to take a moment, because Vitality's recently made some enhancements to our income protection proposition. So this is a good opportunity just to give you a quick overview of what it is we've done and how hopefully it should broaden the appeal to more of your clients. So we'll just hear now from Vitality's Andrew McCurry as he gives you a very brief rundown of those latest enhancements.
Thanks, Rob. As you and the panel have already discussed, income protection is a key benefit designed to protect a client's income against injury or illness. A key part of this is making sure it's available to as wide a range of customers as possible. As a result, as part of Vitality's recent product enhancements, we really tried to make sure it was available to as broad a group of customers as possible, especially those within traditionally higher risk occupations. This could be due to the fact that actually at the workplace they may be exposed to higher risk of an injury or illness, or the impact that injury or illness could have on their ability to earn an income. I'm pleased to say that for 349 occupations, such as builders, airline cabin crew and delivery drivers, we've moved to a permanent own occupation definition. This means that in the event of a claim, they'll only ever be assessed on their ability to do their own job role. Meanwhile, for 280 occupations, such as landscape gardeners, mechanics and plumbers, they'll also now have access to 1 and 2 month defer periods, where previously they would have only been offered a minimum of 3 months. And finally, we've extended the maximum plan age to age 70 for 22 occupations, such as carers, nurses, and teachers. These changes have been very well received by the likes of Protection Guru, and we hope will allow you to recommend Vitality income protection to more of your clients. Back to you, Rob.
Thanks, Andrew. So just to kind of, I suppose, bring this section to a close, and just to remind you as well that we will have a live Q&A at the end. So do make sure that you post your questions and we'll tackle those very shortly. So just kind of wrapping things up a little bit. So, that's all well and good. We've spoken about products, but how do we as an industry ultimately, close that protection gap, get more people to actually take out income protection? What have we got to do, Emma?
Talk about it. Advisors have got such an amazing opportunity and a real responsibility, really, to have those conversations. If an advisor had just sold me life cover, that would have been no use to me whatsoever when I got diagnosed with breast cancer. Absolutely no use. And sadly, lots of clients are walking away with just life cover because those conversations about income protection and serious illness cover, critical illness cover, are just not really properly being taken, with those clients. Might be a bit of a tick box exercise. Yes, I mentioned income protection. Properly talk about it. And actually, I think the way that income protection is being sold is slightly different as well. We've now got products that, solutions that enable you to add on children's serious illness cover or critical illness cover to income protection. Because actually, one thing that we also need to be bearing in mind is that you getting sick, obviously it has an impact on your income, but actually somebody else that you love and care for getting sick can also have an impact. So that whole carers element. And whilst there are some products that have got a direct carers element to their products, you've also got options like Vitality offers where you can add on that children's cover to the income protection, allowing that parent to utilise that money to focus on the family, take a step away from work that actually really could be impacting on their income if they have to, if they don't have a particularly supportive employer, for example, and they have to take unpaid work. So more advisors are having those conversations, and it's really great to see because, that can have a devastating impact on that family's income if a child gets sick. And sadly, that is an income protection need too. Yeah, absolutely. And Michelle, Emma made a point that I think that's really important, is
protection isn't a tick box exercise. It's not a here's some life cover and that's it. It's much more than that, isn't it?
Definitely, it's letting the customer take time to think about how they would really cope and how their family would be impacted without that income that we rely on so much. It's the centre of our world, isn't it?
Yeah, and addressing need is really key here, isn't it? I think you mentioned consumer duty has made that much more important, hasn't it?
Yes, definitely. But it does take a bit of explaining. There's lots of moving parts with income protection, so you do need to ask clients about their own circumstances and how they're going to be impacted, and really bring it back to their budget and finances.
Nick, just we were chatting earlier on about the CI Expert report, and I think it, in many respects, some of the findings there really highlighted just how crucial it is that this IP is being discussed.
Yeah, I mean, it's one of the best pieces of research I've seen in the market for a long, long time. And it proved a lot of those things that we thought were going on. For example, that clients who take cover out to cover their mortgage aren't actually using it to pay off the mortgage. Now, that creates a myriad of problems, which we haven't got time to go into here. But the most striking thing in there was what people were spending the money on, who'd claimed, and that was paying for private medical insurance and helping to pay the bills. So you got two products that are in the market that are designed to help with both of those specifically: income protection to help pay the bills and private medical insurance. And I think we've got to start reconsidering, particularly in the mortgage market, what good advice looks like. Is it selling kick? Because quite often budget means that you're having to sell an amount of kick to meet a budget that's there to help pay for the mortgage than pay off the mortgage. And if you don't, and even if you sell it to pay off the mortgage and they don't pay off the mortgage, you've got an issue. If it's about paying for the mortgage, then income protection's the tool. And as Michelle said, with some kick to help deal with those immediate issues that can arise in case of a serious or critical illness.
You spoke there about those findings. It's think about consumer duty, good outcomes, avoiding foreseeable harm. This is key, isn't it?
And I think we also need to recognise as well, mortgage advisors in particular, have had a really, really challenging time over the last few years. The time that it's now taking for mortgages to be arranged is hugely, just so time consuming. Which means that their time to then focus on protection is stretched, and and we understand that. But that's consumer duty. You can't ignore it. You've got to have a conversation, and if you haven't got the time or the expertise to have that conversation, find somebody that you can partner with to actually do it, so that at least your client is well served. Because if you're a mortgage expert, you might think, actually, I can't be a protection expert on top as well, and which is perfectly understandable. But just make sure that somebody is having that conversation with your client.
Find an expert like Michelle.
Absolutely,
And I think the other point is, if things are quiet for you as an advisor, just think back to all the clients you've spoken to over the years who you haven't talked about income protection to, and give them a ring.
Yeah, absolutely.
And because of rising costs, mortgage advisors that I've worked with, they've found that actually, a few years ago, they might have talked to a couple about income protection, and they've sort of said, well, actually, if one of us gets sick, the other one can still afford to pay the mortgage. Now, with massive increase in mortgage repayments, a lot of couples just can't do that anymore. So actually, just because they said no before doesn't mean to say they're going to say no now, because their situation could be very different. So have that conversation again.
Yeah, absolutely. Well, look, a really interesting conversation, and one that we could arguably spend hours talking about. But we'll now go to our live Q&A. So get your questions in, and thanks so much once again to our panelists. Right, morning everybody. Thank you very much for joining us today. So we're now going to kick off our live Q&A section of today's webinar. So I'm joined by Michelle and Nick, and Hema will hopefully be joining us again, tech and Wi-Fi permitting, in a second to go through some of your questions. So we've had a number of questions submitted by people in advance of today's session. A few of you have posted some questions already in the Q&A section of the webinar, so please do keep those questions coming in. We'll obviously be able to answer a few today, and any that we can't get to, we will follow those up separately afterwards as well. So we will get to all of your questions. So Nick and Michelle, great to see you both today. So let's kick things off. We've had a couple of good ones, I think, here, which just kind of initially speak to some queries around the actual product itself. So I'm going to kick off with this one here. Someone's asked, what happens with an IP policy after a claim is made and the client returns to work? Are there any changes to the term, premium, or being able to claim again in future? So Nick, just in terms of IP and that question, so perhaps you can just kind of give us a bit of an overview there of sort of how it works.
Yeah, sure, Rob. Morning, everybody. After a claim, person goes back to work, the policy will continue. There won't be any change to the terms. The premium will only change if, for example, it's an index policy and there's indexation applied. And they can claim again in the future. The caveat to that, if they want to claim for the same condition again, if that happens within 6 months, then the deferred period will be waived. So if it's a recurrence of the same condition, then we'd waive the deferred period and start paying the benefit straight away, providing the claim's valid, of course. After that, they'd need to go through the deferred period again.
Yeah. So I suppose it's just reiterating that point that unlike some product, income protection is one that you can claim on multiple times and it doesn't end after you've made a claim. So it is almost I don't know, Michelle, kind of how you pitch it. When I was an advisor, I used to sort of say to my clients, it's a little bit like having your own sick pay that you can tap into whenever you need.
What I like to say, it's like an umbrella. It's there for the term of the policy, and then you can dip into that resource when you need it. The only limitation is if you've had a 2-year policy, the claim is 24 months paying, so that's the budget. Other than that, it would actually continue paying until the policy ends, until you retire or until you return back to work. So that's the beauty of income protection. It's peace of mind.
Yeah, absolutely. Yeah, real kind of strength for that.
Someone also point to make. Sorry, just talking about short-term policies. If it's a 24-month payment period, and if you claim for a particular condition for 24 months, then at the end of that, we'll stop paying the claim, but the cover will still continue. So if you have another condition arise, then you could claim for another 24 months. Yeah. And if you have the same condition again in the future, you could claim for that again for another 24 months.
I suppose a kind of slight continuation of this question. Someone here has asked, can you have IP for your entire working life? Nick, can you have IP for your whole working life?
Yeah, I mean, I think pretty much all policies now will cover people through to age 70 as a maximum. There are some occupations where it might be capped at a lower age. We've just removed a lot of the caps for occupations like nurses and certain other occupations where there were arbitrary caps. Teachers was another one where there seemed to be a tradition of capping it at a lower age, but now it tends to be the caps that we've got. For example, there are some occupations we cap at 65. So HGV drivers is a good example there. I'm not sure you'd find many people wanting or able to drive an HGV lorry over the age of 65. That's probably, someone's going to correct me on that, I'm sure. And other ones are things like fitness instructors, where I think we've got a cap of 55 there. But typically you can cover the majority of occupations through to age 70.
Yeah, and another point to add as well is that a lot of people now are changing careers. So a lot of career transition, and you can port this with you, can't you?
Yes, you can. Yeah.
It's a good point, actually, isn't it? Because I suppose you do encounter a lot of people who might sort of say, well, I get sick pay from work, or I've got sort of benefits and stuff. I'm sure my employer will kind of look after me and the like. And I suppose that's the strength of income protection, is that actually when it sort of comes, how many employers are going to pay you your salary if you fall ill and you can never work again? They're not going to pay you a salary up until age 65 or 70 or whatever. But as you said, there's also that strength of income protection and its portability, that you retain. If if you change jobs, change career, become employed, self-employed or whatever, you can, that policy continues. So it's certainly one of the strengths, isn't it, of income protection. Emma, I'm going to bring you in at this point because somebody has asked here, and I think this is a good one to throw over to you. So someone said, I usually lead with IP and have good IP sales, but would love some tips to explain to clients why they should consider income protection and serious illness cover rather than just IP. So how and why should someone maybe think beyond just IP?
So, I mean, there are some really good calculators around to demonstrate that through the statistics as to why you're more likely to need to claim on income protection. So for me, it shouldn't be, do you sell income protection or do you sell serious or critical illness cover? Because actually, one, we don't have a crystal ball in terms of what the client is actually potentially going to have in the future. And, insurance is all about hedging your bets to some extent, covering the risks. And to have both types of policy is really important. I have claimed myself on both. I had breast cancer 5 years ago. So I was able to claim on income protection and I had critical illness coverage. So for me, income protection is about replacing your everyday income, whereas actually serious illness and critical illness can do more than that in some situations, because actually what that does is help you cover the added costs of being sick. And that's not what income protection can do, because it's not covering added costs. It's actually replacing the income that you had. So to be able to have, a lump sum on top of your replacement income is really important. So, for example, for me, I did have PMI there, so I didn't need to use critical illness or serious illness cover to cover those costs, but some people will. There's the added cost of being sick in terms of travel to hospitals, childcare that you might be having to face because you didn't need it before, but you would do now because you're not able to look after your children the same way. Even things like travel insurance for me, that's more expensive now because I've had cancer. I couldn't wash my hair for weeks and weeks and weeks. I had to go to the hairdressers 3 times a week. It's those things that sometimes get overlooked. So for me, it's really important because income protection will often pay out on things that critical illness and serious illness don't do. But then critical illness and serious illness cover can do other things as well. So for me, that's why it's really important to explain to your clients that they do serve 2 purposes. And for those of you that might have read the CI Expert Critical Thinking Report, and if you haven't, I would recommend that you do. They actually ask consumers a question, what would you use the money for if you were to actually have a critical illness payment? And interestingly, and I worked very closely for many years with mortgage advisors. And for them, a lot of it is just about protecting the mortgage debt. Well, interestingly, the vast majority of people would not pay off the mortgage if they got a critical illness payment. And I'm one of those people. I didn't. I paid off some of my mortgage, but actually I kept the money back because I needed to make sure that I had access to funds because I didn't know what the future held for me. So paying off the mortgage wasn't necessarily the right thing. And I'm glad that, as I said, I paid off some of it, but actually I've used it for other things. So do think about that. And actually in the survey, respondents said that they would be using it to pay for treatment. They would be using it to pay for their everyday bills, probably those people that haven't taken out income protection. Some of them would actually gift it to loved ones, lucky loved ones. But for me, it's sort of about choices as well. And I've just recently recorded a video about my cancer experience, because actually I bought a camper van with mine. Now that might sound a bit frivolous, but actually when you're going through a really devastating time, you actually need something else to focus on. So people with families might want to go away with the kids on a really special holiday, depending on obviously what their situation is. There may be other things that they might want to do with that money. But certainly paying off the mortgage is not always the top priority. So it's got to be more than just protecting your debt. It's actually about thinking about what's going to be likely to happen if that person goes through that devastating experience. And actually for everyone, it will be a bit different, but the money gives people choices. That's the most important thing. And as I said, for me, it really made sure that I didn't have to worry about money at a time when all I needed to focus on was beating blooming cancer. That made a huge difference to me. Yeah, it's such an important point, is that I think that we mustn't ever just think of there being one single solution for every client. It's considering somebody's needs in the round, but also
what does kind of holistic protection advice look like? And that might be a blend of protection products. I mean, someone's just posted a question here, which I think is very relevant as well, saying, income protection is a great product in terms of protecting somebody's income, but is PMI something advisors should be talking about? And I'd probably argue absolutely, because income protection is great at covering, as I said, it covers your income, but actually for a lot of people, and I guess this is perhaps the case for the self-employed in particular, is that the thing they will want to do is get back to work very quickly. And PMI, of course, can fast track that access to the right care, diagnostics and things. And, that the cost of that will be very high if you want to pay for that for yourself. Or, of course,
I think given, sorry, I was just going to say, I think given the situation that we're in now as well with the NHS, I think, access to private treatment is even more important than it was, for example, for me 5 years ago. I was very lucky. I got seen within 10 days. I think it was literally about a week later, I was going to see my GP, to actually then having that consultation at the hospital where I had all the checks. And that's the day, sadly, when they told me I had cancer. But now, for most people, that would not be happening. And private treatment gives people choices. I also just wanted to just say just about the Income Protection Task Force 7 Families Initiative. I can't remember which family it was, but for those of you that haven't seen that program, you really, really should, because there's loads of amazing videos there. But one of those families, they had critical illness cover. So they had critical illness cover that paid off the mortgage, and then they were still screwed financially because they had no money left to pay the bills, their ongoing bills, which is why they became one of the 7 families, talking about the impact they, on their lives of not actually having protection fully in place.
Yeah. And Michelle, you are an advisor in the room. How do you kind of position this to your clients when you're talking about different options with them?
Yeah, so I say that we offer dual sickness cover. So with income protection, it's covering you for things that wouldn't necessarily be covered under critical illness policy. So majority of cases when people claim, it's for mental health and musculoskeletal, like backaches and stuff. So with critical illness, that lump sum of money can be used, like Emma said, to, change your lifestyle because you're adapting to having an illness. And sometimes you need to actually make changes to the house, and that requires a lump sum to make changes to your bathroom, for example, to have accessibility. So the lump sum is there to use for the medical expenses and unforeseen changes. You need that lump sum of money, but also the monthly income is, for everyday type of sickness that, are unexpected. You might be in a car accident and unfortunately, a critical illness policy will not pay out for that. So
really important, really key point. Someone's asked that in the questions here, saying that the majority of income protection claims do tend to be for stuff like mental health, as you say, musculoskeletal, bad backs and stuff. They're unsurprisingly, they're also, I think, the 2 most common causes of sickness absence in the UK in general. Yeah.
And how I tailor it as well is that, I at least cover 1 year's worth of salary. Try and base it around their personal circumstances. So if they're earning, 25,000, try and do 25,000 or even 10,000, just so they've got something rather than nothing.
Yeah. I suppose the other thing, just to reiterate, and we touched on this in the panel discussion earlier, is the other thing that I think is worth just mentioning and stressing again is that thinking as well about things like children's cover and how. And obviously, Vitality is one of a very, very small number of insurers to offer children's cover as a separate standalone that you can therefore bolt on to income protection. But again, it's another example of where thinking about different scenarios that could impact somebody. If your parent had a child fall seriously ill, the chances are they're going to want to take some time off work to care for that child. So having children's cover like as a bolt-on again is another thing that's worth considering. Emma, you mentioned that in the discussion earlier, so I think it's worth just sort of stressing that point. Just so having a look here as well, so a couple more questions have come up just around products. So somebody here has asked about the minimum benefit guarantee. So we had a few questions kind of asking about changing working practices. We've touched on this already as well a little bit, and the fact that people change jobs and stuff. So someone said, is a minimum benefit guarantee available as if you can evidence earnings to prevent kind of drop in wages? I mean, Nick, I guess this is Vitality's benefit guarantee in a nutshell, isn't it? Essentially.
Yeah, we what we allow customers to do is lock in their benefit at the start of the policy by providing verification of their earnings up front. So if they take a policy out, if within 6 months they've got the opportunity to provide us with the evidence of their earnings, what they're earning, and then we will lock in effectively that benefit so that come point of claim, we're providing them with that guarantee that that's what they earn. What's very important about that is that will increase with inflation, okay? And that's a point I wanted to make on this. If we're going to properly protect people's incomes, we need to make sure that we keep that real in the future. Inflation erodes the value of money, as we all know, and we've been through a period of quite high inflation over the last few years, and we all know how much less your average pound buys now. So I think inflation, doing that variable earnings, the earnings guarantee, and also indexation, that's your optimum recommendation for a client. It's a bit more work at application, but it's giving them that certainty that at point of claim, their income, that we're going to pay out what they expect us to pay out. And that's something that's unique to Vitality in the way we do it.
And it's pretty straightforward to do, isn't it, Nick? And I think we touched on it in the discussion earlier that, if you're a mortgage broker, you would have done an earnings and income assessment anyway as part of the mortgage application. So you'll have all of the relevant information to hand. I mean, most advisors anyway, hopefully you're doing an income and expenditure and a verifying earnings when initially discussing cover with the client. So it should be quite straightforward to do, shouldn't it, Nick? Just to send that evidence in and lock it in.
And you've got 6 months to do it. And the reality is you're going to either have to do it at outset with us or with anyone else. You have to do it when person claims. And if their income has dropped and doesn't support the benefit that they've been paying a premium for, there's a risk that the amount paid in the event of claim is going to be a disappointment to them, and we want to avoid that, which is absolutely why we've introduced this benefit.
And it's probably worth saying. No, go for it, Emma.
Sorry, Rob. I was just going to say, asking the clients for financial evidence now whilst they're fit and well, probably better than them having to go through all of that at claim stage when they've got other things on their mind. And to be honest, they might not even be in a position. I mean, if you've got a client that, for example, has sadly gone into a coma, they might not even be in a position to actually get all the paperwork together. So getting it all now, particularly for those of you that are mortgage advisors who have gone through all of this anyway to actually work out what borrowing they can go, what they're able to get, then it is a no-brainer. It really is.
Yeah, absolutely. Yeah, it's well worth taking advantage of. There's been a couple of questions come up I just want to quickly touch on around sort of underwriting and the like. And I think we won't dwell on this too much because there's a lot you could say here around this. But few people have asked around, there's increasing kind of prevalence of sickness and people reporting conditions, obviously like mental health now. There's a lot more openness around it, which is great. But obviously with that comes the fact that you're going to get more people disclosing it. I guess kind of this is to all of you, probably more than anything, what this just highlights is that it's really important to be having these conversations with clients as soon as possible, earlier on. It's not, income protection shouldn't be increasingly seen as something that you might buy when you get a mortgage or have children. Actually, the chances are that people need income. If you're working and you've got financial responsibilities, it doesn't matter what age you are, there's a need for income protection.
Absolutely. Yeah. I mean, if you're talking to single 25-year-old clients, life cover you shouldn't really probably be having a conversation about life cover. You should be talking about income protection, because income protection plays such a valuable role, whether they own a house or they're renting, doesn't matter. In fact, income protection in the rental market is something that as an industry haven't quite cracked, but it's so important because most of those people who are renting with the ambition of buying a house in the future. Now, if their income stops, they can't pay their rent and their other bills, what does that do to their credit score, for example, and their ability to actually get a mortgage in the future? So it is income protection and serious illness stroke critical illness cover are products for those younger, should be the ones we're telling to younger people. Rob, I think, mentioned the risk calculator that we have, and other providers have similar tools. You look at those, actually, term assurance isn't the product to be talking to most customers about first. It should be income protection, critical illness, serious illness cover, and then life cover as that sort of belt and braces cover all for the worst eventuality.
Yeah.
But for those of you that are
sorry, I'm gonna go for it.
Sorry, I was going to say, and for those of you that are mortgage advisors, you could have some come to you trying to get a mortgage, and actually you might have to give them the news that they can't borrow what they were hoping for. So they might say, well, actually, okay, I'm going to have to save a bit more, or I'm going to have to wait until I can earn a bit more, or whatever it may be. But don't lose that client. Don't let them walk away without the mortgage and no protection. Get them secured, because chances are they will be renting. And if you can get them secured as a client by talking about the importance of them having IP, then they're much more likely then to come back to you when they are in a position to then borrow that money. Because if you don't secure them as a client, then who's to say that they're not going to go and find Joe Blogg's mortgage IFA down the road, or because their mates just got a mortgage with somebody else and they go with them instead. So actually you could secure people by making sure that you are talking about protection. And sadly, I've seen lots of mortgage advisors that kind of just stop the conversation when they realize that the client isn't in a position to take out the mortgage. As I said earlier, protection is not just about protecting a mortgage debt. It's far more than that. So it actually, one, is the right thing to do for clients, but two, it can actually make very good commercial sense for you to do that too.
Yeah, absolutely. Well, look, we're running out of time, as unfortunately always the case. With there's plenty of stuff to discuss here. I just want to spend the last couple of minutes just talking about. So people have asked, like, where can you go and find out more about income protection? People have asked about kind of advisor training and the like. I mean, I'm going to quickly just say that Vitality's network of business consultants are well worth engaging with. There's a whole heap of training they can do, and it's also well worth going and having a look on the Vitality Academy. There's product training on there, but there's also, we deliver something called a Sales as a Force for Good training, where you can just kind of learn some basic skills around selling, which has nothing to do with product. But Michelle, I'm going to just hand over to you because you're involved with the IPTF. So if advisors want to find out more about income protection,
yes, so Income Protection Task Force, we actually have our own YouTube channel, and there's a load of resources on there. We actually had Income Protection Action Week, and across the week we have gurus and coaching. So Gary Waters, for example, shows you how to overcome objections, and even getting into a conversation with a client can sometimes be tricky. So overcoming those excuses and really hitting home how the client can see the importance of income protection, particularly with using Consumer Duty as a reason to actually let them know of what all the options are available to them to protect their mortgage over the long term. The other person was Catherine Knowles, who actually talked about the underwriting. So sometimes it can be a thorny subject. So I'd really advise everyone to just check out that Income Protection Action Week and Task Force, and there's loads of resources. Thank you. Yeah, no, it's really good, because you're one of the 7 advisors this year as well, aren't you? So I presume so. You kind of advisors is well worth following you on LinkedIn. And having a look at some of that would stuff. Be amazing if people can reach out to me on LinkedIn. I live on there. Yes, the IPTF website, as you say, is well worth having a look at. But I would also definitely encourage anybody watching today who's not seen Income Protection Action or Awareness Week to engage with that. And Emma, like, even the work you're doing as well through like the Women in Protection Network and different things. There's a whole host of opportunities for advisors to engage in content that will hopefully to improve standards and help kind of educate. And
yeah, there's a whole wealth of materials. So it's your BDM. Some of you will be members of mortgage clubs or networks. They will also have resources available to you as well. And there are some great people to follow on LinkedIn, like Michelle, and also organisations like Income Protection Task Force, like Protection Review. Absolutely follow Women in Protection as well. But Protection Guru. There's lots and lots of help out there for those of you that perhaps aren't that confident about what all the options are. So just ask. And if you really feel that actually this is just too much for you to be an but in protection as long as everything else, then consider partnering with a protection expert so that you can pass your clients to them. So you're still fulfilling your duty, your consumer duty, to make sure that they're getting the right advice, but you are being able to focus on what you do best and passing it off to somebody who's an expert in their protection field.
Yeah, absolutely. Yeah, well worth engaging all those things. Well, look, unfortunately, we've ran out of time today. As I say, we could have spent hours on here chatting about this. We've had loads of questions, so thank you so much for submitting those. We've only been able to get across to a very small number of those today, so we will follow up with all of those afterwards and be in touch with everybody who's asked something and product questions and the like. So it just leaves me to thank our speakers, thank Michelle, Nick and Emma for joining me today and for joining us on that panel discussion. Thank you for attending and for joining us today. Hopefully you found it an interesting and insightful discussion, hopefully some good takeaways and learn something. Keep an eye out for future episodes of Forward Thinking. There's a whole host of content that we'll be putting out. And once again, thank you very much for everybody for joining us today. So
thank you.
Thank you.
Bye-bye.
Thanks.
Bye-bye.
Bye.